Hey everyone, welcome to the 7investing.com podcast. Our mission at 7 Investing is to empower you to invest in your future. We do that by providing a ton of free educational content like this podcast and by offering a monthly subscription where our team of advisors provides our 7 best ideas in the stock market each month for just $17. Talked about the free educational content we like to provide. And one of the ways I like to do that is to talk to smart people that are investors, business owners, entrepreneurs. And so with that, I asked Howard Lindzon to come on the podcast. And you probably know who Howard is, but in case you don't, just from his Twitter profile, he is a general partner at Social Leverage. He's a co-founder of Stocktwits. He created Wall Strip, which was acquired by CBS, and he is a serial tweeter that makes me crack up all the time with his tweets. So Howard, thanks for being here.
It's good to be here. Listen, if I can be known for making people crack up, my life's work. I was so inspired by people that crack me up. If I think about,
I mean,
as a lonely, weird kid, Dave Letterman, Johnny Carson. I guess when I got older, Jerry Seinfeld, Gary Shandling, just crack me up.
That's one of the things I've really appreciated about following you on Twitter, Howard. I mean, I've learned a lot from you just from kind of stuff you share, but it's nice to find people that can make you laugh, especially during times like what we've all been through for the last, I don't know, 6-8 months or however long it's been.
Yeah, my only unique perspective, and I put my foot in my mouth a lot, is if my timing's off, because what do they say, it's misery plus time or horror plus time comedy. Sometimes it's just not the right time to drop something. Some things, Hitler, there's never funny, right? Nazis, it's hard to just go there. But pretty much anything else in the world is fair game, it seems. And it's dangerous. That's the only dangerous thing I do.
Yeah.
It's silly. It's only dangerous to my reputation because I get crazies that disagree with everything I say. But I guess it's a form of giving back. I get such great feedback from making people spit out their coffee or whatever, because they're not expecting financial advice to come with irreverence and a bad attitude.
Yeah.
And sarcasm, which is not always, I'm not a professional comedian, so it falls flat 50% of the time, maybe less, but like there's always somebody offended.
Yeah. And that's, finance and investing is super boring. But speaking of danger, you burnt your thumb yesterday. How's it doing?
It's good. I asked Twitter, and I didn't rush to ice because I don't think ice helps, but from previous burnings. But I put toothpaste on it. Someone said put toothpaste on it, and it totally worked.
I saw that. I was going to ask you about that. If it looked like the toothpaste actually worked. Who would have known?
Yeah, someone said to stick it somewhere else, and I didn't do that though.
Yeah. So this is kind of an investing related question, but you also have been doing. I like watching your Q&As and your live streams and stuff. You've been doing SFIX box openings, and they report earnings here pretty soon. And I think there's been some funds that have been buying SFIX. I've never been super bullish on the company just because I couldn't get behind the business, the unit economics. But first of all, how do you like it? From what I've seen, you have not had the best experience necessarily with your choices.
Yes, I'm always trying to find things that have a good story, because in order to be a multi-billion-dollar company, you have to have a great founder who can tell a great story. You got to have a great business, which you just said, and that's suspect, and that's why the stock is lagged as an e-commerce company, right? So you hate buying the last e-commerce stock, which a lot of people want to do because, play catch up. So there's a reason it's a $2 billion company. No, not to knock a $2 billion company, but I'd love to find, $2 to $5 billion companies on their way to 50, or $10 billion companies on their way to 100. And that sounds crazy, but in the world that we live in, the inflated asset world that we live in, that's what brands can be worth, these global brands. So, in a new paradigm, I hate that word too, but in a market where rates are zero and money printing exists and a customer base is global and government is, always a wild card and remains the wild card only, but that's the only wild card right now. And you've had a pandemic to stress test so many companies. We're going to see many more $100 to $500 billion companies, period, and end of story. That makes it hard for public companies under 10 billion that don't have a growth model, that are just asset-based or yielding, lower ROI. People want growth. And so Stitch Fix is interesting because it's interesting, right? Like getting my clothes, I have this Fashology index and I'm looking for another company. So I have a Fashology index, Restoration Hardware is in there, Nike's in there. I guess Adidas should be, but isn't. Under Armour isn't. But Nike, Peloton, and I'm always looking for, that's been Lulu. And that's really where I feel like I wear clothes. I'm 55, I'm shaped like a pear. I have clothes problems. We all work from home. Nobody wears suits. Department stores are out. So there's this whole new category that combines technology and fashion. It's a very American thing. They call it, even Lulu calls himself athleisure. I prefer to call it Fashology. So I'm looking, for a next company to add to that thing. So I'm constantly trying to think, without stretching. The Peloton, is it really fashion? Not yet, but I think it will be. So it's in my index, and it's in my portfolio. So I've been looking at, Real. I've been looking at Stitch Fix. I've tried to own a few times and been stopped out. And Farfetch, which is a stock that I'm long right now, FTCH, which is, an $8 to $10 billion company. It seems to be the clearest of the three between Real, Stitch Fix, and Farfetch. Seems to be the one that makes the most sense. Amazon's trying to copy them, which is good. It's not good short term, because of the Amazon overhang, but Farfetch has got a platform that will allow high-end kind of fashion-y brands to use their platform to reach a larger customer base, kind of like Etsy for high fashion. So I think, I'm constantly looking for those kind of things. And then I have my 8 to 80 list, which is companies would graduate to, which Lulu has graduated to, and actually Peloton at some point may graduate to, which is companies that have customers that are 8 to 80 years old. So, Google, Facebook, even Bitcoin's in that list because of the brand. Zillow, Zillow's not, up and comers on that list are Zillow, Peloton, but on that list, Lulu, Nike, McDonald's. So brands, I want to find the next potential 8 to 80s, and that's more beta in that portfolio. It's kind of what you guys do. And then I want to find 8 to 80 brands. And when the markets are good, I'm really focused on these companies that could become 8 to 80. And when the market's really bad, I generally refocus on the 8 to 80 brands that have pulled back 20 to 30%. And those are the brands that everybody rushes to in a bear market. So it's kind of, that's kind of, where I swing.
I think I'm sharing my screen now, Howard, but you mentioned a couple of your, and this is one of the things I wanted to ask you about is.
That's my 8 to 80 portfolio, yeah.
Yeah, is just some of the different tools you use. And I know you're a big fan of Koyfin. So while you were talking about
I'm an investor, so yeah, I'm a big fan. I think it's one of the best. I've been doing this for 20 years as an individual or retail investor, I call myself, and I ran a hedge fund, including. And for a long time, this is the best product I've ever seen for a beginner or an expert investor. Other than a Bloomberg terminal.
So I get, and I can share these out with everybody. You've shared these links out to your 8 to 80 and then the Howie portfolio as well. But it's a pretty cool function in here. You can create portfolios and then share them out with people. So for anybody that's wondering, this is the 8 to 80 portfolio that Howard was talking about.
The newest, you can pull it back out so we can walk through how I think. Nope. So, and I have a free blog that people can go to where I talk about when I add a name to something as big as the 8 to 80 list. And I think in April, I added Zoom at around $120. I know it sounded crazy and it's just silly. It's up like 400% in the last 3 months, but occasionally happens, right? I added it holding my nose saying, listen, Zoom is now a brand that 8-year-olds are living on and 80-year-olds are living on. If you look at Shopify, it's the same thing. Whether people know they're using Shopify, they're living on it. and it's growing. Netflix, we all know. Spotify, I added recently as it broke out from 160. That is a brand known around the world. So they have to be profitable. I would have loved to have added Tesla at a sooner price. I think the brand is a global brand, but profitability is sketch. And I am an old person, and I don't use Tesla. So Tesla's cost me the most money of all the stocks, because if I just bought one, I'd probably be rich, because I would have bought the stock.
Yeah.
Yeah. I mean, I love McDonald's. That's helped me own the stock. I love Apple and, AirPod, Spotify I live on. That's helped me own it. Tesla, as a non-user, that one really hurt me. But anything here from Bitcoin to Lulu, I live with these products. The only one that I don't is the medical device. I think everybody should have exposure to this sector. And because it's so hard for me to pick individual stocks within this sector, because I don't really understand medical, but in a world in a world that people have wealth and want to live longer, this is like a no-brainer. Less risk. These companies make money in the medical device sector. So again, I'd like to focus on this list when the markets are down 20%. So all these stocks were tremendous buys that I was writing about in March. They might have seemed overvalued, but if you look at the March returns, April returns, even May, if you had just bought this basket, and then my other list, the stocks I own, I don't know if you have it up there, but the actual stocks I own.
Is that the Howie portfolio here?
Yeah, if you go to the Howie portfolio, it's a mix of 8 to 80 and stocks that I think are on their way to 8 to 80, mixed with a few spec things that I want to keep an eye on. So a lot of very tiny positions mixed in here, but generally it's 15 major positions.
Yeah.
I just constantly am fiddling with it, as everybody should if they own individual stocks, but I'm constantly fiddling with it. But my top 10 positions, are McDonald's, Apple dropped out of the top 10 recently, Amazon, Elastic, I'm just looking here, Google, MasterCard, Shopify, I think Snap is now in my top 10. So Apple's like they kind of move in and out, but the top 10 kind of dominate what I have. And then I'll have like quarter point positions and stuff, speculative stuff that I want to keep an eye on just to make sure.
Keep track of it.
Yeah, and if they quadruple, like in the CRISPR space, I can't tell you what that stock's going to be, $400 or zero.
Yep.
But anybody smart that I talk to is like got that in their portfolio on the genetic side. So it's like a venture capital stock position.
Yeah.
Oh, sorry, and Peloton's in my top 10. But generally my top 10 positions, I just know the stories inside out, and I'm a product user.
And do you, for some of those top positions, do you kind of add the same amount, or do you look to have kind of the same, say you have X amount of money and you want to have those be even positions for your cost base, and then you just kind of let them outperform, and that's what decides.
Yeah, I try and let them outperform within my risk. So if something gets to 10%, like Apple used to be, it just kept trimming. It's cost me a fortune. So my own conservativeness has cost me a fortune.
Yeah.
When do you rebalance? But staying true to your risk profile. So my thesis around the stock market is my wealth is in the private markets. So, stock markets to me are not going to change my life. But owning a Robinhood or owning an eToro, investing in those companies will.
Yep.
So, and Apple did, because I owned it for so long, but I mean, I really would have been wealthy if instead of every time I sold Apple, I bought. Now, it would be 50, 60% of my portfolio.
Yeah.
And I guess I'm just not wired. I'm not wired to look at my portfolio and see it move that, but in the end, I think the best investors are wired a little differently. And the reason private markets work for me better than public markets is I don't have to look at the price every day.
Yeah.
And I think if you give people, part of the problem with trading is you give most people, and they can see that they can get out on any single day, and they're going to do stupid stuff. So part of the holy grail of this is the same thing with your iPhone. The people that master their iPhone can turn it over all the time. Like mine's turned over for you know what I mean? Yep. Mastering the market is being able to look at it and not trade. It's just enjoy, and that's why I like Koyfin and stuff. Like being able to talk to people and not have to pull the trigger is the ultimate zen of investing.
Just enjoying the process. I was wanting to ask you about how being an angel investor has impacted the way you invest in public equities. And as you said, most of your wealth is tied up in private companies. But we've heard the famous line from Warren Buffett that he's a better investor because he's a business owner, and he's a better business owner for an investor. So just curious on your take on angel investing and how that has impacted how you think about public markets.
I mean, it's been nothing but good. I think I've talked more people out of being in hedge funds than I think I've done the world a good service. I do think it's not an honorable job. It makes people do dishonorable things, meaning even if you're honorable, it'll bring you to the dark side. Kind of like going on TV. Before Jim Cramer went on TV, I thought it was like God's gift to just being able to read that person and tap into their brain, right? So two things destroy you: hedge funds, media, putting on makeup. So you're constantly battling the idea of charging people for your ideas. Where I'm at now is just give it away and build goodwill, and that helps my private investing, that helps build my network. But being an angel investor has really helped me connect the markets, right? Understanding where private valuations are and where public market valuations are, you really start to see how not crazy things are, and when things become way too crazy. And sometimes it's just way too crazy in the startup world, not just the public world. So having ability to focus on the two ends of the spectrum, the most illiquid early stage technology businesses, and then the most liquid, public securities, has really given me this. It's hard to explain it to people every day. I write about it every day, but I feel like I have an edge in dissecting how the world is thinking about prices and technology.
Yeah. And so talking a little bit about giving back, you've got your website, howardlindzon.com. You do Momentum Mondays, which you just put one out today. So I subscribe to your newsletter. I think everyone else should as well, just for really daily thoughts on the market. But I want to ask you about Panic with Friends. I think you turned Lindzanity, your previous podcast, into Panic with Friends kind of at the start of the whole coronavirus thing. And I listened to, I have not listened to all of those episodes, but I listened to a lot of the early ones. One of the ones that stuck out to me was when you talked to Bill Bishop, and you talked about that. He really helped us learn about the dynamics of China and the US-China relationship. Just curious, you talked to Jeff Richards on there. You just mentioned in Twitter that you've got Patrick O'Shaughnessy and I think Chamath coming up. Mm-hmm. So if you have just a couple takeaways from your experience doing Panic with Friends and how that has kind of helped you as an investor and just mentally get through these last, 6-8 months.
Yeah, I mean, it's one of the writing, and I guess audio now too, you have to include. It's different muscle than writing. Writing is the greatest thing that I ever discovered. I hated writing in school. I'm not a reader. The attention span of a dummy, or we're supposed to be dummies, right? Because I have a low attention span. But I wanted to have people on, not that traded, but that had been through panics. And what are you supposed to do? And without a doubt, what I'm most proud about is, if you look at when we started, it was like from Jim O'Shaughnessy on, it was like, okay, it's too late to panic. My whole thinking was, if you were going to panic when the VIX is 10, not when the VIX is 90. Okay, now we're somewhere in between at 30, and it's very elevated. So I still think we have a bias higher, but you got to panic when the VIX is 10, not 90. And so it was like, too late to panic. Let's talk about what to do next. And at least we gave out really level-headed advice that, stop selling and buy something, or just move away from your money. And so it helped me too. Really selfishly, it all helped me, because the itch is, Google's at 1,000. Really, the temptation is you need to be buying, but it's still overvalued. The panic is well, this could go to 600, no doubt. But so at some level, to be a stock investor, if you don't think that a VIX 70, 90 is coming again, you're crazy. So, this will give people a frame of reference now in the next panic to go listen to the first few episodes and really remember what panic was like, and that the center did hold. Now, if the center doesn't hold, we're all screwed. I don't know what to tell people. You may not be wired to invest if you constantly think the center is not going to hold. And cash is an option.
Yeah, and so we're kind of getting close on time here, but just curious on your thoughts on this whole thing now. We're starting to see the market act up a little bit, some volatility. I think it's most likely a kind of a normal, healthy pullback, but there's a lot of panic out there right now. So just curious if you have any thoughts on that, and if you think you'll be needing to do Panic with Friends for another year, or if are we almost done?
I think we're done. And if we're doing VIX 90 again, people think that's coming back. And I'm all for people having that debate. If it is, we have bigger problems. So it's not about does it come back. It's how do we react if it does? And the way you would react is like, okay, start planning for that today. Sell something today. Yeah. Because VIX is 30, at 90, we're going to see much lower prices. I still don't think people understand the markets. This is a new market structure we're dealing with. And so the first thing I'm trying to think of is like, why would I never liked hotels. I never liked transportation stocks, although transportation is a good index in logistics. There's certain things I never liked. I didn't like Midtown Manhattan for the last 20 years, right? If you were in the tech business, you didn't go to Midtown. So it's like, there's these trends that were already underway. San Francisco was a shithole to many a year ago, 3 years ago. There were problems there. So it's like, we're just seeing an expansion of the problems. So that's not going to get any better, right? So this move to digital is happening. The hard part to understand here is like, who's the sheep? Who's the sucker? Is the sucker like Eastern Asia? Is the sucker Africa? Is the sucker Mexico? Because America's pretty good at distribution. And I think one of the last great rackets we have going is stock and brands and culture. And if everybody in Mexico wants to own Tesla, it's not my fault, right? The stock's going to we have a supply-demand imbalance of great American businesses, and most of those just happen to be digital. So if you light up Mexico with a Robinhood, guess what people are going to buy there? They're not going to buy Mexico Cement Company. Or Mexican grocer, or the Mexican Walmart. They're going to go buy Tesla, Walmart. They're going to go buy, they're not going to buy JP Morgan and Goldman Sachs. They're going to buy Twilio, and they're going to buy fucking Facebook, and they're going to buy Zoom, right? Because that's, to them, a brand that's not going to disappear, right? And so in a world where that's happening, I don't think people really have factored in. And as a ground floor investor in Robinhood and eToro and running Stocktwits, and seeing other companies, start their own Robinhoods or get their first crypto or be able to earn interest on their cash and use an app and Venmo and Square Cash, and they'll be able to buy their first stock. They're going to buy an American company. So how this fully plays out, I don't know. What we are seeing is smart American venture capitalists start SPACs. Like, we'll go buy a brand that we know the rest of the world will love because there's 1 billion buyers of that stock. And that's how the stock market works, is distribution. It goes from the hands of a few to the hands of many. So I'm kind of bullish because we're at the early stages of that. Will there be scams galore? Yeah. Should buyers beware? Yeah, never more than today. But does that mean there's not the best opportunities of all time? Yeah. So you have this incredible opportunity, incredible ways to get involved, like low friction ways, Koyfin, Robinhood, Cash App, Venmo, Twitter, Telegram, Reddit, to communicate to everybody. Has inside information in this era. The question is, how do you manage your money? So in that world, super bullish. In the world of like where we end up on prices, have no fucking idea. No one does. And so the question is, how do you manage your money within that arena is the exciting part. And that's just for everybody to do themselves. But there's, we are in an incredible bull market still. I think what March taught us was that this volatility is going to be back. This is like an earthquake. So I think we're going to have more earthquakes, and they may come closer than together. I can't predict that. We could have another 90 VIX, but I don't think a 90 VIX necessarily means a bear market anymore, right? A 90 VIX may just be, like going up Everest. People do die.
Yeah.
right? There's more people doing it, even though they know they're going to die, right?
Yeah.
There was a lineup on Everest. I line up to die. I'm licking my chops because I have a network of people around to kind of hone in and try and not lose my cool and try and, I'm playing against everybody else. So I'm super bullish on that. But I do think people need to be more careful than ever, at least newbies. But at the same time, spend 3-4 years instead of 10 years now, you can learn a lot. So
Yeah.
does that give
Yeah.
you, so hopefully that gives you like my overall look at it.
Yeah. Thank you, Howard. I know we got to get going. So to kind of summarize my takeaways from this is we're probably in one of the best times ever to be an investor because of the access, because of the information. But the important
Network,
thing,
community.
the community, the important thing is that we do our research, which I know you're a big proponent of, and that we behave the right way in order to empower us to be a good investor. So that was my takeaways from this conversation. And everybody, Howard Lindzon, you can follow him on Twitter at Howard Lindzon, Lindzon, and we'll link to all your podcasts and everything, your website in the show notes. Howard, thanks a lot for your time. I appreciate it.
Yeah. Just like one more thing that, because it was a good wrap up there. It's like, it's easy to be disrespectful, right? It's easy to yell at somebody online, but it's also easy to be respectful and build your network. So it's like, we have these great tools, do you use them for good or evil? I would really urge people to just, it's so easy to yell and to be anonymous. I would say, listen, there's just such opportunity to be nice, like you do, like we do, and give back and say hello to somebody or say thanks for that idea. I would say take the high road on this stuff. It's easy on FinTwit or whatever to just scream at somebody and demand. But hey, there's enough of us out there sharing that you can find. And so I would say, pay it forward, be nice. And these tools are great, and they're a privilege. So hopefully people take advantage of them.
Yeah, that's a great note to end on. We should all make a little bit more effort to be nice and be good to others.
Yep.
Thanks a lot, Howard. It's great talking.
Okay, talk to you.
All right, have a good one. Bye.